in equity and bond markets, it's all about inflation, right? But in the commodity markets, you mentioned it yourself, it's really about geopolitics. And there's three big hotspots in geopolitics right now: Russia, Ukraine, China, US, and more recently, the Middle East, right? Which is starting to get a little more tense with Israel and other countries in the region, potentially, I think, getting a little warmer. So this is really what's going to be driving, I think, commodity prices. And in fact, the reason we're at $84 a barrel is because we have had a lot more Russian supply than we all expected 6 months ago. Remember, we were coming in with really harsh sanctions on Russia, and in the end, we've actually relaxed those sanctions quite a bit, and there's more Russian oil in the market than we ever expected. We've seen Russian supplies increasing from November to December to January to February. And that's what that was.
Is that because of relaxed sanctions, or because the Russians have thought, crikey, we've got to find that some other markets, we'll sell it to India at $30 discount, we'll sell it to anyone who'll buy it at 30% discount. So is it about relaxation of something from G7, which I'm not sure about, or is it actually they've just found other markets?
It's really relaxation, because we were initially expecting ourselves and many others to lose 1 million to 2 million barrels a day of Russian oil supplies. In the end, Russian oil supplies have actually increased. So that's a change in balances relative to expectations of around 1 to 1.5%.
You're not saying they're going to G7 countries, are you? Or to
they're
EU
definitely not going
countries?
to G7 countries, but remember, we've relaxed sanctions. You mentioned the price cap, right? That's one way we've relaxed sanctions. We've also relaxed sanctions, so that means that Russia can export at a discount, but they can export, right? And they can choose who they sell their oil to, right? The second thing that we've done is we've also relaxed sanctions on shipping. We were going to be banning ships for life that carry Russian oil illegally, and now we have a 90-day ban, which is essentially a round trip to China. And the third thing we've relaxed is the rules of origin. Before, if you were going to be buying oil from a Turkish refinery or diesel from a Turkish refinery that was buying Russian crude, that wasn't going to be allowed, but then it was allowed. So it's a musical chairs game, so to speak, where we haven't really taken any chairs out of the table. So there's a lot more barrels around, so to speak. And that's why oil's at 84. But China's still coming back, so we're still constructive, maybe less constructive than before, because we have more supplies. But the prices, I think, likely go up from here, unless central banks in the West end up creating a big recession. That's perhaps the big downside risk.
Francisco,